The VIX volatility index, some people call it the fear gauge, but strictly speaking, it's investors' expectations for volatility over the coming days, the 30 coming days, in fact. And here to break it down and address its controversial name is Yahoo Finance markets and data editor Jared Blickery. I didn't even know it was controversial.
Well, you do now, and we're gonna get to the bottom of this. I love Steve Sosnick. He's chief strategist over at Interactive Brokers, and that's one thing he says: the VIX is not a fear gauge. It is a measure of 30-day volatility, but it's kind of a fear gauge. And what is this? We're looking at a number here, 19.03. If you take all the S&P 500 options, so those are index options that are expiring over the next 30 days. There are a bunch expiring this Friday because it's the monthlies. We got weeklies coming up. You take all the ones from the next 30 days and you get one number. That's 19.01. And when we chart that over time, what we find is these levels kind of appear. It goes up and then it just kind of reverses. And when we see the levels going up, that's indicative of traders expecting the range to expand of the S&P 500. And that usually means it's going to go down because the range of the S&P 500 of stock indices tends to go down, and the range expands more on the way down as on the way up. But it is possible sometimes that the range expands on the way up, and the traders expect that, and then you see a higher VIX and a higher S&P 500, but that is not usually the case, and so usually it is kind of a fear index. We did have Slatestone Wealth's chief market strategist Kenny Polcari in here yesterday explaining why he believes 22 of these levels, 22 is the VIX's key breakout level right now. Let's take a listen.
22 is the recent breakout because we saw, if you look back on the chart over the last quarter in October, November, and again December, the VIX came up from the complacent area, tested 22, backed off, tested it again, backed off, tested it again, and backed off. And so after it tested 3 times, typically the 4th time that it tested, it usually breaks up and breaks through. And when it does, it creates more angst in the market.
And that's what we're talking about, a little bit more angst in the market. As the VIX rises here, there is a little bit more angst represented by traders' fear in the market. But I think where people go a little bit wrong is they see a higher VIX and they're like, I got to buy more VIX because the market's going to continue to go down. The market can continue to go down even if the VIX retreats, because that first spike, a lot of times it doesn't last that long. And here's Kenny kind of explaining some of these dynamics.
The concern about the breakout is that stocks will weaken, right? The algos, more specifically even than the human beings, were programmed to respond to levels in the VIX. So as the VIX breaks out of 22, the most recent high, then you'll see some of the algos kick into sell mode, right? And so stocks will come under decline.
And so this just highlights a lot of what goes on in the market is systematic. That is, these large institutional traders, they have levels in mind. It could be the VIX, it could be the S&P 500, it could be the dollar, it could be the 10-year. And when you get all these levels that are important being crossed at very similar times, and right now we're seeing a lot of levels in flux right now. I was just talking about the S&P 500 and Bitcoin an hour ago. When all of that happens, you can see the market change character. And that's kind of what we're looking for. We're reading the tea leaves of the market. Now, I also have an average of the VIX, so you can call this VIX seasonality, all the way back to the beginning of calculations in 1990. So over 1 year, and this represents 1 year, the VIX traces out a familiar pattern. So we begin the year at a low level. On average, it's about 11, 12, 13. Then we get a little bit of a rise into February and March, then a retreat. Then you have the summer doldrums where, for the most part, we are a little bit quiet. But then in August, things pick up. And back to school time, back to work time, end of summer, you get this spike a lot of times in October or November. And guess what? That is prime time crash season. Doesn't mean all the crashes have to happen then, but you look at Black October of '87, the fall in 1929, those were huge October tops. And so that's what we're watching right now. We saw that decline into year end, that played out, and now we're right at the beginning of this year, just in time for a new president. So we might think, we might come to expect that we're gonna need to watch the VIX to see as President Trump takes office, as the inauguration takes place, and those first few days of signing orders, what happens with the market? Are we going to see a little bit more uncertainty? We'll have to find out.
Jared, really great breakdown, and I understand now.
Thank you. The controversy, yes.
Yeah, exactly. Thanks so much, Jared.